Under the linked exchange rate system, it is normal operation by the HKMA to buy Hong Kong dollar and sell US dollar when the weak side convertibility undertaking, which we call the CU, is triggered. Therefore, there is absolutely nothing to worry about. Our system was introduced in 1983 and has been supporting Hong Kong's financial stability for nearly 40 years. Under the system, the Hong Kong dollar is always stable within the convertibility zone of 7.75 to 7.85 Hong Kong dollars to $1 US. So what has the HKMA been doing to keep the Hong Kong dollar exchange rate within the above range? This is done by our commitment to honor the CU. The strong side CU is 7.75 Hong Kong dollars to $1 US, while the weak side CU is 7.85 Hong Kong dollars to $1 US. We could visualize this CU like a corridor with walls on both sides. One wall is the strong side CU, and the other one is the weak side CU. Both walls collectively set the boundary of this corridor. And in more layman terms, the HKMA is similar to a super money changer which operates round the clock. When either CU level is reached, and if banks so request, we will conduct a relevant operation under the system. In situations of capital inflow to the Hong Kong dollar system, the interbank Hong Kong dollar exchange rate will never go over the strong side wall of 7.75 because we undertake with banks to buy US dollar and sell Hong Kong dollar without limit. In situations of capital outflow from the Hong Kong dollar system, the interbank Hong Kong dollar exchange rate will never go below the weak side wall of 7.85 because similarly, we undertake with banks to sell US dollar and buy Hong Kong dollar. We have been honoring our commitment for both CUs and conducting the relevant operation under the system over the years, on the basis of which the interbank Hong Kong dollar exchange rate has never moved outside our 7.75 and 7.85 range. Therefore, there is absolutely nothing to worry about. Regarding the recent buying of Hong Kong dollar by the HKMA as reported in the press, because this is completely in line with the design and expectation of the system, that is selling US dollar and buying Hong Kong dollar when the weak side convertibility undertaking is triggered. In fact, this operation is nothing new to us. We had conducted similar operations under the weak side CU in 2018 to 19 during the previous US rate hike cycle. Needless to say, the HKMA as well as the market are very experienced and well prepared for this operation. Lastly, one should also note that when the HKMA sells US dollar and buys Hong Kong dollar upon the triggering of the weak side CU, it does not necessarily mean capital outflow from Hong Kong, because the capital could still remain in Hong Kong in the form of different currencies. We have actually seen this before. The aggregate balance is part of the monetary base of Hong Kong. We may visualize our monetary base as a big wallet, and our aggregate balance will be one of the compartments in this big wallet. If you want to see how rich a person is, we will check out his or her entire wallet and add up every dollar in all the compartments. In fact, apart from the aggregate balance, we also have other compartments in our big wallet, namely certificates of indebtedness, government-issued notes and cons, as well as exchange fund bills and notes. Adding all these up, our big wallet is currently having around 2 trillion Hong Kong dollars, which is almost 6 times larger than it was in 2008. Another important point to note is that this big wallet is only a component of Hong Kong's foreign reserves. Let me call it our big safe, which comprises lots of other assets as well. Currently, Hong Kong's foreign reserve is around 1.7 times of our monetary base, so we should be confident that Hong Kong's financial stability and our linked exchange rate system are firmly and reliably supported at all times. Looking back, prior to the global financial crisis in 2008, where major central banks conducted quantitative easing, our aggregate balance had always been at very low level, talking about less than 10 billion Hong Kong dollars. Even more recently, for example, for the full year between April 2019 and April 2020, the aggregate balance was only at 50 billion Hong Kong dollars or so. As you can see from the examples I just shared, regardless of the increase or decrease in the aggregate balance, banks' operation and interbank settlement activities continue to be very smooth. In other words, how the aggregate balance moves will not impact on banks' daily operation, let alone deposit by all members of the public with banks. Technically speaking, interest rate increases when the aggregate balance decreases. And when the interest rate differentials between US dollar and Hong Kong dollar narrow, there will be less incentive for carry trades, thereby slowing down outflow from the Hong Kong dollar system, stabilizing the aggregate balance. The pace and extent of Hong Kong dollar interbank rates adjustment is influenced by many factors and would ultimately be dependent on the Hong Kong dollar supply and demand situations in the local market. Regarding the saving and mortgage interest rates, which are always the focus of the public, banks will decide having regard to their own funding cost structures and other relevant considerations. Recently, some banks have raised the prime cap for the newly applied HIBOR-based mortgages, and market expected more banks to follow suit. As such, we would like to remind members of the public to carefully assess and manage the relevant risks when making property purchase, mortgage, or relevant decisions.